Hi, it's Jeremy here, and in this video, I'll be helping you position yourself properly in the new week to actually find a very good entry to join in on the gold buys this week. Now, I'm sure a lot of you are thinking and you're confused. How do I get an entry? How do I get in on gold? Gold is buying. Where do I enter from? So I'm actually here to sort that out for you. So in the first week of February, my team, those on my VIP circle, right? It's called Trade Camp 26. It's a camp where a group of traders, actually paid to enter. This is not me selling it to you. Admissions are closed already, been closed since the beginning of this year. But where they get to take every setup I trade in this year with the target of making millionaires out of that group. And so at the beginning of February, I got them this trade entry. We took this buy on gold, a very long buy. I think I should be able to show you the entry. Okay, I can't go over there. Probably I'll include this while I'm posting. I'll include it while I'm posting this. Right. So I got them a very good trade entry on gold, right? About a year. And so first I'm going to be doing is in this video. The first time I'll do for you is that I will show you how I got this buy entry, and then the second thing I will do for you, which is the most important in this video, is that I'm going to help you with finding a very good entry to wait for and take on gold that has at least an 80%, 85% probability of actually getting to profit, right? Just so that you don't out of FOMO take a very bad trade and make a lot of losses where you could have just been patient, waited patiently, and have gotten a very good entry on gold, right? And so we're going to be diving right into the video right now. So first of all, I'm going to be deleting all this, everything. So I'm going to come to the weekly time frame for this. Okay, so I think I might even play price back. So let me see. Here's my replay too, right? So at the time, price was, I think this was where price was, right? Yeah, this was the price action, right? So here we have this weekly mitigation block. Now I trade order flow, so I always read structure and interpret the structure. The structure is where the money is. If you can read structure, you literally don't need to know much more to actually make good money from the market. So this higher low, higher high, higher low, higher high, right, on the weekly time frame. And so the market left behind something called an order flow leg, and this is a valid order flow leg. And so that it's from this current order flow leg that we'll be looking to take a trade from. And finding our point of interest or our PRA on this order flow leg is this mitigation block that is right here. And so I will call this weekly MB. Right, so this is a weekly mitigation block, right? And this mitigation block is where I waited for price to come and give us rejection. And so if I should play price forward, let's play back. Okay, so you see price came back. This took a while. I think this happened within 1 week. Right, price sold down to this place and rejected. Now whenever price comes to your point of interest, what I do is I always go 2 time frames lower. So in this case, the 2 time frames lower than what the time frame that your point of interest is on. So in this case, we have a mitigation block on weekly time frame, and so I'll come down 2 time frames lower, which is the 4-hour time frame, daily 4-hour. And so coming down to the 4-hour time frame, what do we observe? Now what I want to see is, I want to see first of all rejection, and then after seeing rejection, I want to see displacement, and I want that displacement to create a valid bullish order flow leg coming out of this weekly mitigation block. So that's going to be my confirmation that the market actually wants to buy out of here. And so if we play price, you get to see that it took a while, but price created a valid order flow leg. Yeah, you can see already this creation of valid order flow leg. We have low, high, higher low, right, higher high, right, and a break of structure. Now I'll help you with this. If you want to know if your order flow legs are actually valid, ask or check on the impulse side of the order flow leg, or on the expansion side, does price leave behind the fair value gap? If price leaves behind the fair value gap for you, then it is a valid order flow leg that you can trade from. And so in this case here, I can see the fair value gap that price created for me right here, this fair value gap. So this makes this order flow leg very valid. And so what I did was I found a point of interest, a PDRE that I want, I know is high probability for price to come in. This is it might look like a shooting star candle or an inside bar, or it's actually an order block. Right? Do your studies, you get to discover that candlesticks like this are usually order blocks. If you come down to the 2-hour, 1-hour time frame, you get to see that it's actually an order block. But just so that this video will not be lengthy, I'm not going to go down. But this was my entry, and I sent this signal, this exact signal, to my group members on the participants of Trade Camp 26. Right, I'll target the previous all-time high because we are coming from a very higher time frame point of interest, right? So previous all-time high, and this is 1:9.27. Let me see if I can show you guys that. or they'll have to scroll through. But I'll quickly play price and let's see. So price kept buying for a while, right, until finally we had price come to tag us in. If I remember correctly, I gave this signal on Tuesday, but it ended up being triggered on the Friday, I think around, was it Asian session? Yes, around the Asian session, right? And so the price triggered us in, and we've been holding this trade entry since then. We've been holding it since then. And so if I keep saying price, you see that from this entry, price has gotten to the current point where we are in the market, right? And so we've been holding this entry from that time till now, right? And we've taken day trades on gold, but we've not had any good entry that we could have held until today. And so I've shown you how I got that entry, the entry for myself and my team members. That was week 1 of February. Now this is week 1 of March, and I'm here to do the same thing for you. So stick with me. So if we should go up to the daily time frame, this is Monday morning. I think this is 1:49 p.m. a.m. in the morning on Monday, right? And this is the second day of March. Now we've had Sunday's candlestick close already. And how has Sunday's candlestick closed? Sunday's candlestick closed as a very bullish candle. Now, what this has completed for us is that price has successfully created another bullish order flow leg, right? That we can trade off. This is simply higher low, higher high, then higher low, higher high. So it is this current higher low, higher high that we are going to trade. And the reason why we are going to trade it is because it has a valid fair value. It has a fair value gap. And whenever your order flow legs have fair value gaps, they are valid structures that you can trade. And so paying attention to this. Now on this order flow leg, now there are different types of fair value gaps. And for me, the kind of fair value gap that price creates determines the kind of point of interest that I'm going to use. But in this case, I'm going to be using this mitigation block here. So I'm going to call this the daily mitigation block, right? Daily MB. Right, so this is the daily MB, right? Daily mitigation block. And what I'm going to be waiting for is, you can see that today's candlestick is bearish, right? I'm going to be expecting that price will retrace to this daily mitigation block. It might be today, it might be tomorrow, but this is what I'm going to be waiting for until price tells me otherwise. I'm going to wait for, just like I did here, where I waited for price to come into this weekly mitigation block. I'm going to wait for price to come to this daily mitigation block. And then when price comes to this daily mitigation block, I'm going to go 2 time frames lower. Now the exact price point this is at is 5,248. I'm currently using forex.com charts, Google charts on TradingView. Right, so yours might be different if you are using Rwanda, FXCM, or any other, right? But just observe the week. You can see that what I took was the week of this block right here, this bearish candlestick right here. That is the mitigation block. I can't go into details to tell you why the week is the mitigation block, right? Except you want to sign up for mentorship, my mentorship program, right? But this week, trust me, is the mitigation block. Just like I have done in many times or before in the past, right? So I can boldly tell you that this week is the mitigation block. And so what I'm going to be watching out for is when price comes, I'm going to come down to the 1 hour time frame, and I'm just like in the weekly mitigation block example, I'm going to be waiting for price to give me a valid bullish order flow leg, a rejection and the creation of valid bullish order flow leg on the 1 hour time frame right here, and then my entry is going to be off that order flow leg to target the all-time high. Now it is so easy to get a 1:6, 1:8, 1:10, 1:20 even trade setup on this, depending on what kind of structure price creates when it gets here. But this is what I'm watching out for on gold. And so you want to hold your horses, you want to press the brakes. You might be trying to get entries, how to get an entry, how to buy gold, but chillax, wait, right? So you don't end up losing your money and give your money to patient traders like me, right? So you want to be patient, you want to wait, only take trades from high probability regions. If gold does not give you an opportunity to enter, there are other markets. Find other markets. GBP, JPY, USD, JPY, GBP, USD. Find something else to trade. It doesn't have to be gold. If gold does not give you your entry criteria, you don't have to take it, right? But for me, this is what I'm going to be watching for in the new week, right? But it is also possible for gold to do something else, right? This is currently the 1 hour time frame. At the close of this current 1 hour candlestick, we would have had price create a fair value gap in this market, right? And so it is possible that price creates a fair value gap and then use that fair value gap to buy up, right? Now, if gold does that, if the market actually does that, I'm going to change my point of interest from this daily MB to whatever structure price creates out of this fair value gap, if and only if that structure, that bullish order flow leg, has a fair value gap. If price does not create a fair value gap on the structure that's going to be coming out of this fair value gap, this 1 hour fair value gap, I'm not going to trade. I'm just going to assume that whatever structure price creates coming out of here is going to be taken out as liquidity for price to finally come to our daily mitigation block, right? So this is what I'm going to watch out for in the new week on gold, right? There are a lot of opportunities in the market that we can capitalize on. You just have to be patient. And if you actually want to receive my signals, you can the entries into trade camp 26 are closed until next year, where we have in trade camp 27, right? But if you want to receive signals on a monthly subscription basis, right, you can get them. You can send me a DM, right? Send me a DM, and then I give you the details. But monthly signals, monthly subscription, 30,000 naira, and bi-monthly, if you want to pay for 2 months, it's 50,000 naira, right? So this is not me compelling you. You see, I've given you the setup. I've given you the trade plan that for the week, right? The signal subscription is of your own volition. But watch this video, understand it, and actually apply it. Don't lose your money unnecessarily in this new week, right? So cheers. Stay jiggy, stay motivated, stay profitable.